Okay, hi students. Welcome to Computerized Accounting, Accounting 1115. What we're doing in our video today is we are going over Chapter 5. So this is your new assignment that we started this week, where we're going over purchases and cash payments and how to record those in QuickBooks. So like always, I'm going to always start out with our sample company in our test drive mode, and I'm going to be going through the steps outlined in your textbook. Again, we're doing Chapter 5, which is part of our operating activities, which is purchases and cash payments. So up until the point, we've done Chapter 3, which was setting up our new company. And then we did Chapter 4, operating activities, where we talked about sales and cash receipts, and we did invoices and recorded deposits. So now we're doing the other side of operating activities, which is on this side where we make purchases and make payments. So we're going to look at a more detailed way of creating a vendor. We're going to look at recording a purchase order, a bill for the receipt of products or services on account, record the payment of bills, record credit card charges, record checks, and then of course, prepare the trial balance. Now, again, we're using our sample company to kind of walk through the steps in our textbook. So in this company, in this chapter, we're going to, of course, be using the sample company. You'll be recording operating activities such as adding vendors, purchase orders, bills, bill payments, credit card charges, and checks to the sample company file. Now, remember, we stop in the middle. If you stop in the middle and try to come back, none of the work is saved when you're in sample company. So when you return, the same sample company without your work will appear. All right. So at the end of the chapter, when we go to do the trial balance, it may not look the same because you left back and nothing was saved. So I just kind of want to remind everybody of that when working in sample company. Sample company is just great because it's just fun to play around. You can't really mess anything up because, like I said, nothing is saved. So you can really go in there and just really just play around and do some crazy stuff and really get a good feel of how QuickBooks Online operates and looks. All right, so the first step we're going to talk about is adding vendors. Now, we did add a vendor. We added Channel Islands in our case 1 when we did our journal entry way back in our first learning model. But now we're going to talk a little bit more about how to actually set up a vendor a little more detailed. So just like in Chapter 4, we talked about customers, we kind of went into a little more detail about what it means to add a customer and all the information you can add for that customer. So we're going to do the same thing with vendors. Now, how can we go and add new vendors? Okay, well, we're going to come over here and we're going to go to expenses. And we see under expenses, we see vendors. So we can click on that. And it's going to give us a list of all of our vendors. So since we are in the sample company, there's a lot of vendors already set up under our sample company. But how to add a new vendor, we would come over here and click on the green new vendor button. And we see this window pop up. All right, so the vendor that it wants us to add is called Valley Rock. So we're going to start out here where it says vendor display name and enter Valley Rock. Okay. All right, now if we were to enter, say, a name of a person, so if we put in the name of a person along with the company name, then we could have different display names. We could use the company name, Valley Rock, or we can use the person's name, either first name, last name, or last name, first name. All right, so I just kind of want to show you how that would look. So whichever one you choose for the display name is the name that will be printed on the checks. If we were to make a payment to this vendor, and we didn't do like credit card payments or debit card payments or electronic fund transfers, we actually still wrote checks, etc., whatever. That's the name that'll be printed on the checks. All right, it also gave us an address to add, so let's go ahead and type in that address. All right. Next, it has us go down for some additional information. All right, so obviously here, if this vendor, if we're a legit vendor, you would probably put in their business tax ID number. So if it's an actual business, the business would have its own tax ID number. If it was an individual, you would use their social security number, because this is how you would track how much you've paid to them and et cetera for tax purposes. All right. So there's lots of different information you could put in here. The one that it wants us to add in our textbook is payment terms. All right. So in other words, this vendor has extended you a line of credit. In other words, they're going to allow you to do a bill me later situation where you're going to go ahead and order products and services from this vendor, and they're going to invoice you later. And they provided that their credit terms are net 30, meaning that you have to pay them within 30 days of the invoice date. So you can go ahead and set that up. There's other things you can set up, what default expense category do you want to use? That's really interesting. So let's say this vendor only provides you with a very specific product or service, and that product or service is always going to be charged to a very specific expense account. Then you can come in here and you could charge that expense account that you want to charge to. Or if this vendor is someone that you order products and services from, you could possibly, I think it's only set up for expenses. It's not set up to go to assets, but if you are ordering actual products that are for resale from this vendor, it would obviously go to inventory asset would be the account it would be charged to. All right. So we don't have an opening balance with this vendor, or if you did have an opening balance with this vendor, you could put that information in here as well. We set up opening balances with our vendors when we did a journal entry, but this is another way you can set up an opening balance. So if you didn't want to do the journal entry to record your opening balance, so we had a payable already set up with Channel Islands, and we recorded it using a journal entry, but you could also set it up recording it just by adding the new vendor. You can come in here and create the opening balance. Now, the only difference between this one is, I believe, opening balance, it doesn't allow you to pick which accounts it's charged to. So it may or may not create an accounts payable entry for you. So, but that's just an option. All right. So once you've entered the information provided for that vendor, you just go ahead and click save. And now it tells you that the vendor Valley Rock has now been saved. So you can come down here, everything's in alphabetical order, and you can see the new vendor you just added. All right, next we're going to talk about purchase orders. Purchase orders are really important when you're running a business. Businesses use purchase orders to formally order products or services from its vendors. So it's kind of like an order form that you can email to your vendor saying, hey, I need to order this. And you submit the purchase order to them, and you tell them, and you detail in the purchase order what it is you're ordering from them. And then they can use that purchase order to fill your order. Purchase orders are also really great because if you remember going back into Financial Accounting 1, when we start talking about becoming a merchandising business and ordering things, purchase order is also part of your internal controls when it comes to purchasing. Because I think we talked about purchase orders not only when we talked about turning into a merchandising business, but also when we talked about special ledgers and special journals, because we talked about the accounts payable subledger, accounts receivable subledger. We talked about the purchasing special purchasing journal, which is only records purchases made on account, which will be offset with accounts payable, et cetera. So we talked about that in financial accounting. So purchase orders are great because you can use purchase orders not only as a formal way of ordering your products and services from your vendors, but it's also a checks and balance, so that when you receive your products and services, you can use that purchase order, match it against the invoice, as well as the physical items you received, to make sure that what you ordered on the purchase order is what you actually physically received, and what you ordered on the purchase order matches what you're being billed for on the invoice. So a purchase order is really, really important in running a business because it's a great checks and balances to make sure that you are being charged for what you ordered and you received what you ordered. So let's talk about how we're going to add a purchase order. So purchase orders are done under the plus new button up here. So we come up here to the plus new, and we go under our vendors section. Remember, everything we did about in chapter 4 was under the customers column. Well, now everything in chapter 5, because we're talking about purchases and payments, this is going to be under the vendors column. So we're going to come over here, we're going to click on purchase order. And what's going to happen is it's going to bring up a purchase order form. All right. So we want to select the new vendor that we just entered, which is Valley Rock. So we can come down here to Valley Rock. If we had an email for them, it would pop up right here automatically. But we see here the information that we put in. We can have it shipped to somewhere else too, if we wanted to have it shipped somewhere else. And of course we can change the date. Now for a sample company, we're just going to leave today's date as the default date. That's fine. All right. So next we want to fill out, what are we going to order? All right. So what are we actually ordering? All right. So we come down here. So we have two areas. We have two details. We have the category details and we have the item details. Okay. When we're ordering products or services, specifically products for resale. All right. When we're ordering products for resale, we're going to always use the item details. If we are doing a purchase order, and let's say we're purchasing office supplies, we would use the category detail. All right. So category detail is when we're ordering things to run and operate our business. Item details is what we will use when we are ordering items for resale. All right. Because so let's just look at the drop down menu under the different categories. So we have category detail. All right. So the things that pop up here would be our normal expenses, our operating expenses that we may or may not order or have to pay for. All right. So we could use, we may have to do some repairs or some office expenses, as I said earlier. Okay. So let's say we're going to do a purchase order to Staples and we just want to order some office supplies. All right. So we may just put it under the category office expenses. So these are not items for resale. So let's look at item details. Let's click on that. When we click on this, these are items that are in our inventory list. So these are our products and services in our inventories list that we're going to resell. So that's why we have two different sections. We have the category detail for our normal operating expenses that we may utilize a purchase order to order, such as office supplies from Staples, the example. Or we have item details, which we use to reorder our inventory items. Okay. So here we're going to, you can select on anything you want to. You can just click on the pump, as an item that we're going to order. Another item we could maybe click on, these are obviously just items that we order maybe from this specific vendor, but you can click on anything and then you can come over here and you can change the quantity. So we want to order 100 pumps. Okay. So we're going to order 100 pumps. All right. So we see there it's like $10 a pump. So we order 100 of them, it's going to be $1,000. All right. So what you would do then is you would most likely hit save and send, and it would probably automatically email it to your customer. Or you can just hit save and close, or you can print it. Either way, you can do. So we're just going to go ahead and click save and new because we're going to do a second purchase order. So let's go to save and new. All right. So now it's going to automatically number your purchase orders. So you don't assign a number to your purchase orders. It's automatically done and it's always in sequential order. All right. So let's do another one. So let's pick another vendor. Let's pick the one that they have in the books, Hicks Hardware. All right. So now we see their information pop up. All right. Oh, so it's been autofilled. That's another feature of QuickBooks Online. So it's a lot of times when you go to do a purchase order for a vendor, it'll autofill in what you ordered from them last time. So you don't even have to technically make it reoccurring. It's just going to automatically autofill it in. Now, if you want to, you can make a purchase order reoccurring. You would just click on make reoccurring, and then you would set the details of how often you want it to reoccur. And then you can set it up to where it's going to automatically send a purchase order to that vendor for those specific items at whatever in intervals you set up. Okay. So here, we see we already have some items, and this again, it auto fills it in based on what you ordered from the vendor last time. So it just auto fills. So we want to click and maybe change some quantities. All right. So maybe we want to change, click on the 25 here. All right, for the sprinkler pipes. All right, so we can click on it. We can change how many we want. All right, it also tells us how many we already have on hand. All right, so if we maybe want to change it and we're like, let's go ahead and order 30 of those because we only have 31 on hand. So we can even come up here. Notice when we click on it now, it tells us how many we have on hand, and it allows us to change the quantity of what we want to order. All right, it says I only have 2 on hand, so let's go ahead and change that to 3. And so on and so on. I mean, you can, it's pretty neat because it'll tell you how many you have on hand, and you can adjust how many you want to order. And then once you're done adjusting it, you can then just click save and send if you were going to actually send it to the vendor. But for our purposes, we're just going to click save and close. And so that's it for a purchase order. So basically, it's really easy. You just pick what vendor. So you should already have the vendor set up in your system. If you don't, let's go back in there and let's look at it. Let's go back in to purchase order. All right, now let's say you want to do a purchase order and you've never used this vendor before. Look here. You can add it. Right there from the purchase order, you can add the vendor. All right. Or you can select a vendor that you've already added. And like I said, if it's a vendor that you use on a regular basis, it's going to autofill in whatever you ordered last time. And then as we did before, you can just adjust the totals based on what you have on hand. All right. And then you would just, once you've completed it, then you would send it off to your vendor as a purchase order or purchase request, however you want to word it. And then your vendor would take your purchase order and fill your request, ship it to you. You would use the purchase order to verify you received everything you ordered. And you would also use that purchase order to verify that they what's on the invoice that you received from that vendor. All right. So next, let's talk about bills. All right. So in the previous chapter, we created invoices to customers for products or services that we rendered. All right. That invoice serves as a bill to that customer. So when we're sending an invoice, we call it an invoice. When we're receiving an invoice, we call it a bill. All right. So it's literally the same thing. It's just, are you the customer or are you the vendor? So in chapter 4, we were the vendor sending an invoice to our customer. All right. So now it's the flip side. Now we're the customer receiving the invoice. All right. From the vendor. And when we receive an invoice, we call it a bill. Why? Because it's a bill that we have to pay. All right. So it's still an invoice. It's just a matter of, are you sending it or are you receiving it? If you're sending it, we call it an invoice. If you're receiving it, we call it a bill. I hope that makes sense. I hope I explained it enough ways to make it make sense. But that invoice serves as a bill to that customer, signifying a sales transaction that we did. All right, now, when we go to enter into a business transaction, such as purchasing a product or service from a vendor, you expect them to send you an invoice. And again, the invoice you receive from a vendor is going to be called a bill. All right, and bills are recorded in QuickBooks to signify the receipt of a product or service. All right, so you would not enter that bill into QuickBooks unless you actually physically received the product or service. So again, you would have a copy of the purchase order that you sent to the vendor. You would have the product itself that you ordered, and you would have the bill or invoice that you received. Okay, and you're going to match everything up to make sure it matches. If it does, then you enter that bill into QuickBooks to show that you've received the product or service. And then we will create a liability, usually accounts payable, when you enter the bill. All right. And then you can even have it set up to where the bill would automatically pay on the due date, or you can submit it for payment. Now, the inventory count is affected when the bill represents a product being delivered. So we'll talk about that also in detail. Now, in QuickBooks, the terms of these bills could be one of the following. It could be a net 10, net 15, net 30, or net 60. The net reference means the bill is due to be paid within a specific number of days. For example, 10, 15, 30, or 60 days. All right. And it's usually 10, 15, 30, or 60 days of the invoice date. And the invoice date is usually around the same day that the items were shipped to you. Other terms can be the 210 net 30. So 210 net 30 represents the 2/10 net 30, meaning you could get a 2% discount if paid within 10 days. Otherwise, full amount is due within 30 days. So this we talked about also in Financial Accounting 1, to where sometimes if you pay the invoice early, they'll offer you a discount. Now you can set up such terms to appear on invoices to customers and bills from vendors, but QuickBooks does not calculate them automatically. So in other words, we just really haven't implemented the discounts as of yet. So we won't be utilizing that feature, but it is possible to be used in QuickBooks. All right, so in this section, we're going to really focus on recording a bill for the receipt of services and products on account, meaning you will have been given terms, usually net 30. So you will not have to pay the bill for 30 days after the bill, for 30 days. The first product purchased had been previously ordered using a purchase order, and the second product order is a new product which had not been previously ordered using a purchase order. So both of these purchases will affect inventory and are going to be recorded in the items detail section of the bill. So just like what we talked about the purchase order, we have the category detail and the item detail. All right, so it's consistent with the bill. It's going to be recorded in the item detail. All right, so let's first talk about to record a bill from a vendor for the receipt of products on account. All right, so what we're going to do is we're going to go back up to the plus new, go under the vendor column, and we're going to click on bill. All right, we're going to select the vendor, Tim Phillip. So you can scroll down, they're going to be in alphabetical order. All right, now this says that there is an existing purchase order. Okay, exit out of this. All right. All right, so so if there is, so what's happened here is your QuickBooks has recognized that, hey, you sent a purchase order to this vendor. Does this bill go with this purchase order? That's what it's asking you right here. Does this bill that you received go with this purchase order? So if indeed the bill you have is for that purchase order, then you would click add. So now we have add all, and then we have add here. Why? Well, you could have multiple purchase orders. You really could. I mean, that's not uncommon. You could have multiple purchase orders. So if this bill was for all open purchase orders, you would just click add all. If the bill was only for one specific purchase order, then you would just click the add button under that purchase order. Okay. So what it did is when I said clicked add the purchase order, now that information is pulled over here. Okay. All right. So we've added this purchase order to this bill, which identifies an open purchase order. So now QuickBooks has matched that open purchase order to this bill. All right, to this bill. So what we want to do is now we want to go ahead and fill in the rest of the information. All right, we want to select the net 30 for payment terms. All right, that's going to change our due date. All right, so you would enter the bill date. So the bill date would be whatever the invoice date is. So you would change this to match your invoice date. You would select the proper credit terms, which is net 30, and then that will calculate your due date. Right. We don't need to worry about category details because we're only doing products and services. So we just collapse the category details, and we've already expanded the item details, and we've already added that open purchase order and linked it to this bill. The bill now contains information from purchase order 1002. All right. So we can see here, and the amount should be 125. All right. So all we've done now is we've closed out that open purchase order because that open purchase order has been closed out and is now being recorded as a bill. So what we've done here is we've increased our inventory asset account, all right, by one item for $125. All right. So literally, let's think about it on the accounting terms. We have debited our inventory asset account for this item, the rock fountain, for $125. And then we've credited a liability account, specifically accounts payable. All right. That's what we just told QuickBooks to do. All right. We've increased our inventory asset account, and then we've increased our liability account, accounts payable. And it will sit in accounts payable until we pay the bill. All right, so let's go ahead. Now, how you can do that, you can click save and schedule payment. Like I said, you can schedule the payment to process payment automatically on the due date. Or you can just click save and close, which is what we're going to do because we're obviously not going to schedule payment. But if you wanted to schedule payment, then we would go through the process of creating and setting up the payment. Since we don't have actual bank information linked to it, we're not going to, but I just wanted to show you that was an option you could do. All right, now let's do another bill. All right, let's go back in here and click on another bill. And this time we're going to select Tanya's Nursery. All right, here, nothing popped up. We don't have any open purchase orders for this vendor. And that's okay. You can still get a bill and there not be a purchase order. That just means that when you ordered these products or services from Tanya's Nursery, you just didn't use a purchase order. You just didn't use a purchase order. All right, but we are going to go ahead and select terms of net 30. Okay. Yes, looking here. All right, so and we're going to expand both. We're going to be using both. All right, we're going to be using both. All right. Now, again, what's the difference? This is normal operating expenses. These are your items for resale. These are your inventory items. Okay, there's a difference. So that's why it's called category, and this is why it's called product or service. So let's first start by typing in some products that we've that are part of this bill. All right, so we can click here. All right, now what's obviously available in the book and what's available here is not the same. So we're not gonna be able to do everything exactly as the book, but I'm just gonna pick a couple of items. So we can see here that we just picked a few items. So we got sprinkler head and sprinkler pipes. So let's just put in 15 of these and 10 of these. All right, see. Next, we want to possibly, okay, and that was it. That was it. So you're creating a bill. So again, it's product and services. So what's going to happen is we're going to increase our inventory asset because we ordered products. Products means our items that are for resale. So this is going to affect our inventory account. So we've increased our inventory account, and we've also increased our payables account. All right, so we've entered this bill. This bill, we've entered the bill date, the credit terms, net 30, which tells us when it's due. So we can either save and schedule a payment, or we can just click save and close, or save and new. So we're going to do one more bill to kind of really get a practice. Well, maybe a couple more bills. All right, so this time we're going to do another one. We're going to do Computers by Jenny. All right, but here we're going to do it under category details. All right, so we're going to select equipment rental. All right, so this bill, again, nothing popped up for purchase order, meaning we don't have a purchase order linked to this. That's fine. You can be invoiced without there being a purchase order. All right, so here what we did was we have a bill from Computers by Jenny for equipment rental. All right, so we're gonna come over here and it's for $1,200. All right, we could add a description if we wanted to, like rental of of computer equipment, you can enter that. But basically, again, I wanted you to show the difference between the category detail and the item detail. This would be an operating expense. These are your inventory items for resale. So these are your resale items. These are your operating expenses. All right. So again, let's look at that. See, it falls under expense accounts. All right. So we go ahead and click save and new. We're going to do one more. All right. This is going to be under our insurance agency. All right, so what we're going to do here, see, it's already auto-filled in because we've used this before. But we're going to change our category from insurance, and we actually want to record it under prepaid expense. If I can find it. Right here, prepaid expense. So what we're doing is we're actually going to prepay our insurance premium. So remember back in financial accounting 1, we talked about certain types of accounts that are deferred. All right. And we talked about prepaid expenses. So a prepaid expense is actually an asset. What we're doing is we're paying our insurance premiums ahead of time. So it's not necessarily expensed yet, it's prepaid. We've paid it before we provided the service. So the insurance company hasn't actually provided us the insurance yet. So as each month expires, we will actually take this from prepaid expense and actually expense it to our insurance expense account. All right, but this is just a way we can record a bill showing that, you know, we received our insurance policy. It's like for 6 months out, right? So we know we're going to record it to prepaid expense, but we're going to go ahead and enter the bill, record it to our prepaid expense for our insurance, and now we can go ahead and just click save and close. So those are a whole bunch of different examples of different types of bills that you can enter. So now that we've created a purchase order, now that we've entered bills linked to purchase orders and bills not linked to purchase orders, now let's talk about the payment of these bills. So in this section, we're going to focus on recording the payment of a bill for the receipt of services. On account, we're going to talk about how to record a credit card charge and how to record the payment of items by check. All right, now to pay bills, we're going to go back here to the plus new, and we're going to click on pay bills. And what it's going to do when you go to pay bills, you remember all those bills we just entered? All those bills we just entered? Well, they're here. Now they're here. So, and then we have some bills that are flagged saying, hey, these are past your due date. So these need to be paid first. So it's going to show bills that we just entered, and it's going to also show bills that are already previously entered, and it's going to flag any bills that are maybe past their due dates. So it's a listing of all possible bills that can be paid. Okay. So in the pay bills window, we're going to select MasterCard. All right. So what does this mean? This means that we're using our MasterCard to pay these bills. Okay. Just basically means we're going to use our MasterCard. So your MasterCard, this could be a credit card or a debit card. Okay. Because you can set it up in QuickBooks to where instead of writing a check for every single expense, you can have a debit card on file to where you use your debit card to pay your expenses. And so this could be a MasterCard, but it could be really a debit card that's linked directly to your checking account. Okay. But we're going to go ahead and select MasterCard to pay these bills. All right. Now we can come over here and we can click the payee column title to sort the listing by payees alphabetical. Or you can click due date and list everything based on due date. So you can actually change these based on whatever your needs are. All right, so we're going to leave them sorted by due date. And we're going to click the box of the payee for the PG&E. All right, now immediately and moved an amount to the payment column. You can see here. All right, so let's also click on Norton Lumber. Let's click on the Roberts and Associates and the insurance. So basically what we're going to do is we're going to capture all 4 of these that are overdue. And you see now the amounts over here in the payment. Now you can obviously alter how much you want to pay. So maybe you want to pay less or maybe you want to pay more. You could do that if you needed to. All right. All right, so then what you could do is you can then click schedule payments online. You know, so if obviously it was actually linked to a certain amount or a credit card or whatever, we would basically move it to payment online. All right, instead we're just going to click save and close. But those are ways you can select bills for payment. So we've now paid bills for products or services received for which we've actually entered a bill. So remember, all those bills we've entered Well, that's how we would go in to pay them. We would go up to the plus new and we click the pay bill. So let's click on it now. Now all those bills are gone because we showed that we paid them and we paid them using our MasterCard. Okay, that's basically what we did. All right. However, often you will pay for a product or service or other expense for which you've not received a bill. All right. These are vendors who give you no terms and require you to pay immediately. All right. So these are what we call due on receipt. So an example would be like a credit card charge for fuel or a check that you wrote for supplies. So we need to still record these transactions. All right. So again, these are not linked to any purchase orders. These are not invoices or bills that we received in the mail. All right. These are those business transactions where you actually went out and physically swiped that credit card to buy the gas, or you swiped that credit card to buy the supplies, or you physically wrote a check to purchase these items. So either way, this is how we would use QuickBooks to come back and record them. All right. So these have already been paid for. They were either paid for with the credit card or debit card, or they were paid for with a written check. So we don't need to set up a bill for payment. We don't need to record a payment. All right. So what we're actually going to be doing here is we're going to be recording the expense. We're going to be recording it as an expense. All right. So let's think about that. We've already wrote a check for it, or we've already swiped the credit card to pay for it. Now we just got to capture what we just purchased on our books. Okay. We want to record that transaction on our books. All right. So to record these transactions, we're either going to use the expense task or the check task. Okay. So let's go back here to the plus new and select my timeout. So we're going to either use the expense or the check task to record these transactions. And again, these are transactions that are already completed transactions. We've already completed them. We don't have to set them up for payment. We're not having to match them to a purchase order. We're not having to enter the bill that we received in the mail or email to set up, to record, to set up for payment later. All right. These are transactions that are already completed and we just need to record them on our books. So the first thing we're going to do is we're going to click expense. We're going to click on the expense under the vendors column. All right. And we're still going to select payee. We're going to select Chin's gas and oil. Why? Well, we had to fuel up. We were out running errands and we had to fuel up. All right. All right. Now what account did we use? All right. We're going to say we're going to use our MasterCard. Okay. So when we bought fuel, we used our business MasterCard. All right. So now when we're doing our case studies, and we'll do that here shortly, as soon as I finish this last section right here, we will skip over and start doing our actual case studies. So I'll do chapter 5, case 1 with you. It says to record a credit card charge. All right. So I'm going to exit out really quickly. We'll go back in. Yes, it leaves. So when we're in the plus new, you're going to think you need to, when it says record this credit card charge, you think you're going to need to go to under the credit card. No, listen to me now. When it says to record a credit card charge, we use the expense task. Use the expense task to record the credit card charge. All right. So we went and bought fuel from Chin's. We used our MasterCard. Okay. Now notice it auto-filled in the last time we used that vendor. That's what QuickBooks does. It's going to auto-fill in whenever we use that last vendor. And we just need to update whatever we need to change. All right. What did we pay with? Right. We paid with our MasterCard. Okay. So what a payment, so we're going to make sure that we used our payment account MasterCard. We're going to state that we used our MasterCard as our payment method and we purchased fuel. And we're going to change the amount. We purchased $85 of fuel. And then you click save and close. And that is it. That is it. Now, obviously, if you bought something else, all right, if you bought something else, you would select something else, all right? But we bought fuel, specifically fuel for the automobile, our business car. All right, so we just click save and close. And that's how you record, again, that is how you record a credit card charge. Okay, a credit card charge is you use the expense task. Now, let's go back under the plus new icon, and this time let's select the check task. Okay, here what we're going to do is we're going to record the payment of a utility bill. So we were out and about we got fuel, we used our MasterCard to purchase fuel, and we're running to the phone company because we're going to pay our phone bill. All right. So, and we're going to write a check to pay our phone bill. All right. So we didn't enter the bill, and we just got it in the mail, and we just ran down to the phone company and quickly wrote a check. Now it's going to automatically use the next check number in sequence. But if you need to change the check number, you can. But it's going to automatically use whatever next number is in sequence, because every check you write should be in sequential order. All right, we're going to pick our vendor. Our payee is going to be the California Telephone Company. We wrote a check, and we wrote a check from our checking account. All right. And so we're going to come over here to our category detail. Again, we're not using item detail because it's not a product or service that we're purchasing. It's our utility expense. So we're actually going to look for our utilities expense account. So we scroll down, and we see utilities, specifically telephone. And you come in here and you enter the amount. All right. Now, again, we already wrote the check. We already wrote the check to the telephone company. All right. We wrote check number 71 to the California Telephone Company for a total of $325. So now we're back in the office, and we've got to record it. So we were out and about, we got fuel, and we used our MasterCard to purchase the fuel. And we stopped at the telephone company to pay our phone bill, and we wrote a check. Now we're back in the office. We just used the expense task to record that fuel charge that we did on the credit card. And now we're using the check task to record check number 71 that we just wrote to the telephone company. So once that's completed and that's done, you just click save and close. All right. And that is it. That is it. That is it for chapter 5. All right. So what we're going to do is now we're going to open up our case 1 company, and we're going to open up our homework assignment for chapter 5, case 1, and we're going to complete those steps. Okay, so I pulled up my case 1 company, as you see here. I've gone into Blackboard, and I went into our assignment for chapter 5, and I opened up the PDF for chapter 5, case 1. Okay, so we're ready to start. All right, so we're going to be adding operating activities, specifically purchases, credit card charges, and cash payments to our company. Okay, so again, this is going to be a continuation from what we did in chapter 4. So make sure you're using your case 1 company for all case 1s and your case 2 company for all your case 2s. Okay, so the first step it asks is it wants us to add a new vendor. So we can come over here to expenses, come down and click on vendors. We should only have one. Well, we have a lot of vendors. Okay, so I know what I did. Just bear with me for a moment. I'm in the wrong class. I'm teaching multiple classes, so you guys forgive me. So I'm just going to exit out of that and go into the one for this class. That's what happens when you teach too many classes. It's like, how did I get so many vendors all of a sudden? That's so confusing. All right. So here is my case 1 company for this class. I apologize, everyone. All right. So go back to expenses and click on vendors. All right. So we should only have one vendor. This is the vendor that we set up back in chapter 3 when we did our journal entry. And we set up our opening balance for accounts payable. And we selected Channel Islands. So if we look at our first step, it wants us to add a new vendor. It's called Stewart Surfboard. So remember, to add a new vendor, we just simply click the green new vendor button. And we're going to come in here and we're going to enter the name. All right. Now it doesn't give us any other name to enter, so we'll just leave it as surfboards. And maybe if I could spell, there we go. All right, now we're going to go down here to address, and it gives us an address to enter. Just a quick, San Clemente, not San Diego. Okay. I actually lived in San Diego for several years. A lot of fun. All right. And then it goes down here, payment terms are due on receipt. So we don't have any line of credit with this particular vendor. All right. So once we're done, we can click save and close. All right. So there's added that vendor. Now we go to step two. Step two was this add yet another vendor. So we're actually be adding like, I think 3 vendors. All right. So add another new vendor again. This time, Village Travel. All right. Going down here to address. Oh, wow. They're on the same street. All right. Due on receipt. And actually, I think my eyes skipped down one. And this particular vendor is different. So let me go back. I'm going to show you how to do that. All right. So when I was entering Stewart's surfboards, I think my eye jumped down to number 2 by accident when I said set up the credit terms was due on receipt, because Village Travel is due on receipt. So we need to edit our vendor. Let me show you how to do that real quickly. See how when I move my mouse over the vendor name, it creates a blue hyperlink. Just click on it. And you can come up here and click edit. And we can scroll down here and click on it and change the payment terms, because it is supposed to be net 30. So that was really good that I made that mistake. So I can kind of show you guys how you can actually edit the vendor that you've set up. Okay. So we'll go back to vendors. So now we've added 2 vendors. And I think number 3 is where we add our 3rd vendor. So let's add one more vendor. All right. And it's Office Depot. All right. So scroll down here to address. All right. And this is also going to be due upon receipt. So there's only one that had net 30, and that was our first one, Stewart Surfboards. And you notice it keeps them in alphabetical order when you add them. All right. So we've done steps 1 through 3. We're good. All right. Now it wants us to add a new account, and it's going to be for a credit card. All right. So how do we do that? Let's go down to accounting. Now remember, there's 2 ways you can access your chart of accounts. You can come over here to accounting and access your chart of accounts, or you can click on the gear icon and access your chart of accounts. So there's 2 ways you can access it. All right. And wants us to add a new account. So we're going to click on the green new button. All right. And it's going to be a credit card. So we're going to go ahead and click on account type for credit card. All right. Now, basically, you're only having options of credit cards here. So credit card, credit card, credit card. You know, so when we click on the drop-down menu, there's really nothing else you can select. All right. The name it wants us to use is Visa. And no starting date or opening balance. That's literally all we're doing. So your account type is credit card, your detail type is credit card, and we're going to name it Visa. And you just click save. And that's all you have to do for step 4. All right, step 5, it wants us to add another new account. So let's click on the plus new. And here we're going to be adding a supply asset account. All right, now let's talk about that. What does that mean? So we have an inventory asset account. All right, so inventory asset are items for resale. Well, supply asset, remember way back in Financial Accounting 1, supplies are an asset until they're used. All right, now these are consumables, not resale items, but consumables. Your paper clips, your pens, your Post-its, okay? Any item that is used, okay, in your daily operation, not for resale, but in your daily operations. So when you first purchase the supplies, they're an asset. And then as they're consumed or used, they're expensed out to a supply expense account. So I don't know if you remember way back in Financial Accounting 1, I don't know how long ago some of y'all took Financial Accounting 1, but we talked about how we purchased $1,300 worth of supplies. We record it to our supply asset account. And then at the end of the month, we did an inventory and realized we only had $500 worth of supplies on hand. So we had to expense out $800. Okay. So that's the account we're setting up right now. We're setting up a supply asset account because we're going to be ordering some supplies from Office Depot, and we need that supply asset account established. So when we order the items, we have the account to post it to. So we're going to click on assets. All right, it's going to be other current assets. Let's see here. Click on other current assets. So, you know, obviously there's no supply asset account. So it's other current assets. And then it's not any, it's not inventory. It's not any investments. Okay. It's not a prepaid expense. Okay. And it's not undeposited funds. It's other current assets. So your account type and your detail type are both going to be other current assets. And we're going to name it supply, excuse me, supplies, asset. Okay. And go ahead and click save. All right. So we've completed steps 1 through 5. Now we're ready to go on to step 6. We're going to add a new product. Okay. So remember, we're going to come over here to go to our gear icon. I'm going to go to products and services, and we're going to click new. And it says it's a tracked inventory item. So we're going to click on the t-shirt icon. All right. The name is going to be California Nose Rider. All right. Now, we're setting up a lot of things. We're having to set up some vendors. We're going to just set up some accounts, and we're going to have to add new products. Why? Because we're going to be using these vendors to order this new product. We're going to be using vendors to order some supplies that we, you know, and we're going to be using probably a credit card to pay for some of these. So that's why we're setting all this up. We're going to be using this in some transactions. We got to get it set up so that then we can use these new vendors and products and accounts to record our transactions. Okay. All right. Now we have 0 on hand because we haven't ordered any yet. And it's going to be as of January 2nd. Okay. All right. We want to use the inventory asset account to initially record it for the sales price is going to be $3,200. And it's going to go to our sales account. And the cost of these items are $1,700. And they are going to go to our expense account, cost of goods sold. All right. So we're going to go ahead and click save and new because we're going to add a second item. So on number 7, we add another tracked product, and this is going to be called the 808. We have 0 on hand. We're going to keep the date, January 2nd. We're going to use continue using inventory asset. Now the sales price of this one is $2,700. Again, going to our sales account. The cost of this item is $1,500. Continuing to use our cost of goods sold. All right, now we can click save and close. So we've added those new products. All right, so we've added a new inventory item called the California Nose Rider and the 808. Now we're ready to do step 8. All right, step 8 says record a new purchase order for products ordered. All right, so remember, we use a purchase order. We're going to come over here to the plus new. Under the vendor columns, we're going to click purchase order. All right, now we're ready to order our first item. So the vendor we're going to use is Channel Islands. So we're going to come down here and select Channel Islands. It tells us the purchase order date is January 2nd, 2024. All right. Now, what are we ordering? All right. Well, we're ordering products. We're ordering products. It says we're going to order product 1, Fred Rebel, a quantity of 5, product 2, the Rook 15, a quantity of 4, and then product 3, the Water Hawk. So we're ordering products. So we're not going to use category detail. We're going to use the items detail. So the first thing we're going to select is the Fred Rebel. All right. And we're going to come over here. Now look, it says we have 0 on hand. We're out. We're out. All right. So we're going to order a quantity of 5. All right. Now, remember when we set them up, we set up what is the original cost of these items. Well, that's what that rate is. The rate here is pulling the cost. So in this purchase order is going to encumber these funds, showing that we are submitting a purchase order to Channel Islands to purchase these items. And once we enter the bill will then increase our inventory asset. Okay, it'll increase our inventory asset for the amount of the cost and set it to accounts payable until the bill is paid. And then once the bill is paid, it'll take it out of accounts payable and it'll go against whatever form of payment we chose, whether it's checking or credit card. All right, so that's the next item. The next item we ordered is the Rook 15. So let's come here, Rook 15. Come over here. We have 8 on hand, but we're going to go ahead and order 4 more. 4 more. All right, and then the last product we're going to order is the Water Hog. So come over and click on the Water Hog, and we're going to only order 1 of those. All right, so we've ordered 5 of the Fred Rebels, okay, 4 of the Rook 15s, and 1 of the Water Hog. All right, so once that's complete, we can go ahead and click Save and Close. All right, so now purchase order 1001 is saved. Now number 9, oh, we're going to do another purchase order. Okay, that's fine. We'll go back here to the plus new and we'll hit purchase order again. All right, so this time the vendor we're using is our new vendor we just entered, Stewart Surfboards. All right, so what are we ordering? We're ordering products yet again. So again, we're not going to use the category details. We're going to use item details for products. So what products are we going to order in step 9? All right, we're going to order the 808, which is that new product we just entered. So we should have 0 on hand. So how many are we going to order of the 808? We're going to order 2 of the 808s. And then we're going to order the California Nose Rider. Again, we have 0 on hand because we haven't ordered any yet, but we're only going to order a quantity of 1. We're going to only order a quantity of 1. All right, so we're going to order 2 of the 808s and 1 of the California Nose Rider. All right, so once that's completed, go ahead and click Save and Close. So now we've created 2 new purchase orders. And see up here, it automatically used the next number in sequence. Okay, it's just automatic. All right, now we're number 10. Number 10 wants us to record a bill based on the purchase order 1001. All right. Now, let's say we accidentally mess something up. And we're like, oops, I think I've used a wrong date. How do I fix that? So let's go under vendors and let's go under Stewart's Surfboards. All right. And we see that purchase order. Let's open it up. All right. So what did I mess up on this purchase order? Well, I didn't put in the right date. It's supposed to be January 3rd. All right. So if you mess something up, if you realize you accidentally put in the wrong date, all right, I want you to know you can fix that. All right. If you messed up on the quantity, if you messed up on the date, anything, you can fix that. And you just click Save and Close. And now what I've done is I've now fixed that purchase order. So how did I do that again? I went under expenses. I went under vendors. All right. I opened up the vendor and then I just clicked on the purchase order and it opened it right up for me. Okay. All right. So never fret if you miss something in one of these steps, if you forgot something, even if you ran your trial balance and you realize something's not right and you're like, oh, I did not even change the date and you got to go back. You can do that. You can absolutely do that. Okay. All right. Now we're ready to go to number 10. Number 10 is now to record a new bill. All right. Now, you can do it one of 2 ways. Okay. You can click on Channel Islands and, you can copy it to a bill here this way. Okay. Or, let's go back to vendors or one of these other items, we can create a bill for any of these other vendors. Okay. You can just click create a bill. All right. But let's do it how we kind of did it in the textbook. Let's go up here to the plus new and let's go down here to the vendor column and let's click on bill. All right. Now let's open up a new bill. All right. So I want to kind of be consistent and do it like we did in the textbook. All right. So at number 10, it says we're going to record a new bill based on the purchase order 1001 to vendor Channel Islands. So let's come over here and let's choose our vendor. And the vendor we're going to choose is Channel Islands. All right, so it says here we have a purchase order. All right, so you remember when we were in the textbook and we clicked on that vendor and we had the purchase order, we just clicked add. So we can come in, we do the same thing here, we just click add. And what it does is it pulls it over, it pulls that purchase order over into a bill. Why are we doing this? When you go to record the bill, you are signifying that you've received these items. All right, so on January 2nd, we sent this purchase order to Channel Islands, where we requested the Fred Rubble, the Rook 15, and the Water Hog. Okay, it is now January 5th. Okay, because that's the date it says here, January 5th. That's what it says in note step number 10, January 5th. So we are signifying by recording the bill. So we pulled this purchase order over into a bill. We're signifying we've now received these items. So we're verifying that we did in fact receive 5 Fred Rubbles, 4 Rook 15s, and 1 Water Hog. All right. When we received them, we should have actually gotten maybe a physical invoice or maybe an electronic invoice via email. All right. So we should be looking at that invoice. All right, when we're entering it as a bill into QuickBooks. So the first thing we're going to do is verify the terms. The terms on that invoice that we received from Channel Islands is net 15. The bill date is January 5th because that's the items that they shipped them and that's the day we received them. So January 5th, all right, is the bill date. Now, a lot of your invoices are going to have an invoice number. Okay, so we actually physically had the invoice or physically had the bill, it would have an invoice number on it. And that's what you would enter right here is that invoice number. I will tell you this much, working in accounting, that's a very important piece of information, make sure you add. So if you're ever out there in the real world and you are doing QuickBooks and you are entering a bill and it has a bill number or invoice number, okay, because remember bill and invoice are used interchangeably here. You want to enter that number right here. It's very important. All right, now, here, what you can do is you can go ahead and from here, you can schedule payment if you want to schedule payment. Or if you're like, no, I'm not going to schedule payment. I just want to make sure I get them and enter to show that because what's going to happen now, what's going to happen is see what the purchase order did was it just encumbered that money. Okay. It encumbered it, meaning it kind of like set it aside saying, hey, you know, you got this outstanding purchase order out there. There's not really a payable set up yet, but it's showing that it's on order. Okay. Now what you're doing when you enter this bill, when I go to hit save, when I save this bill, what's going to happen is it's now going to increase. See right now where it says quantity 0. All right. As soon as I save it, that quantity is going to change to 5. All right. The quantity will change to 5. We will now have 5 on hand because again, when you enter a bill, it's signifying that you've now physically received these products. Okay. So it's going to increase the inventory asset account. All right. And it's going to set up a payable. It's going to set up a payable for Channel Islands. Okay. So you're going to increase your inventory asset account and you're going to increase your liability account, accounts payable. All right. So when we go, so what we can actually double check that. So remember, the Fred Rubble was originally 0 on hand. So as soon as I click save, we can go and check our inventory and it should show 5. Okay. So let's go ahead and click save and close. And let's go do that. Let's go look at our inventory. All right, let's go down to the Fred Rubble. Look, now we have 5 on hand. Now we have 5. All right, because again, what does that bill do? Bill signifies that you've received the item, so you've entered the bill. So we've now increased our inventory asset account, and we've also increased our accounts payable because we now have a payable for Channel Islands because that's what that bill does. That bill creates a payable. All right, now we're ready to do step 11. We're going to record on yet another new bill, but this time it's not with a purchase order. So we're going back in here and we click on bill. And it's for a vendor that we haven't set up yet. So you remember I told you that from either the purchase order or even from the bill task, you can still add a new vendor. Okay. So the vendor is going to be the San Diego Gas and Electric. All right. So we just go ahead and click save. All right. So They didn't give us an address. They just said, I'm recording a new bill without a purchase order. All right, so I'm going to go ahead. First thing I'm going to do is I'm going to change the terms to net 15. I'm going to change the bill date to the 8th. All right. And we're not going to use item details. Why? Because this is a utility. So we're going to be using category details. Okay, remember, item details is only when it's a product or service. Everything else is category details. All right, so I'm going to click on category details, and it automatically takes me to my expenses. Automatically takes me to my expenses. All right, and I'm going to scroll down, and I'm going to be looking for my expense account utilities. I hope I already have utilities set up. Boom, there we go, utilities. All right, so obviously you would want to select a specific category, but if you don't have one, you can just select utilities. All right, and then in the description, you can put gas and electric. Okay, so there's options. There's options. All right, and then we want to put in the amount, which is $145. All right, so we received a bill in the mail for our gas and our electric utility. So we're going to create a bill. All right, so we're setting up a payable to our San Diego Gas and Electric Company. All right, that's all we're doing. That's what we're doing right now. So we received the bill in the mail. So now we're entering in QuickBooks and we're setting up a payable. All right, so it's going to automatically debit the expense account for utilities, and it's going to credit our liability account, accounts payable. Okay, that's what I mean when I say setting up a payable. Okay, that's what I mean. So thinking of it in terms of financial accounting, again, we're increasing our utility expense account and we're increasing our liability account, accounts payable, specifically for San Diego Gas and Electric. All right, and click save and close. So now that bill is saved. All right, number 3, we're going to record another bill. All right, again, without a purchase order. So go back over here to the plus new and click on bill again. All right, and once again, it's going to be a new vendor. All right, and the name of it is Prime Properties. All right, doesn't give us any other information, just the name of the company, Prime Properties. Okay, click save. All right, so what are we doing in step 12? It says record a new bill without a purchase order. All right, so we're going to change the terms to net 15. The date of the bill date is January 9th. Okay, so remember, whatever credit terms you select will determine what the due date is. All right, so what we're doing here is we're going to be doing rent or lease. Okay, rent or lease. So what we're doing is, I guess we're paying our, we're setting up a payable for our rent. We're setting up a payable for our rent. So the first thing we're going to do is we're going to select the expense account rent or lease. So we're looking for that expense account. All right, so we're going to select rent. All right, it's not equipment rental. So we could select building and land rent, or we can just select rent. It just says rent or lease, so we're going to select rent. All right, and the amount we're going to put in is $2,500. Now we have a second category. And the second category is we're actually going to be selecting prepaid expense. So I'm looking for the account prepaid expense. Now, if you can't see it and you don't want to scroll for it, you can start typing in the name prepaid expenses. So there it is, prepaid expenses. All right, we're going to enter the amount 500, 5,000, 5,000. Okay, what are we doing here? What are we doing here? Okay, looks like we're paying the first month rent and then we're prepaying the next 2 months. That's exactly what we're doing here. We're paying our first month's rent and then we're going to go ahead and pay the next 2 months in advance, which is why we're making them prepaid. All right, and you can even put in a description, prepaid 2 months rent. All right, and then we can even say paid January rent. You could put in descriptions, obviously. You can put in descriptions if you want to. I didn't mean to. All right, but that's what we're doing here is, so we received a bill for the first 3 months worth of rent. So we're going to go ahead and expense out January's, okay, to the rent expense account. And the next 2 months we're going to put to prepaid. Now, we know also when we took financial accounting that they don't stay in prepaid. So as each month expires, we normally would do an adjusting entry where we would remove it from prepaid expense to expense. And we actually have a chapter where we cover adjusting entries, but I just wanted to kind of remind you guys of that. All right, so once that's done, we can go ahead and click Save and Close. All right, so we've completed steps all the way through 12 now. So we've recorded 3 new bills. We recorded a bill based on a purchase order, and then we recorded 2 bills without a purchase order, one for utilities and one for rent. Now we want to pay all bills due. All right, so let's go over here to Plus New, and let's click on Pay Bills. All right, so if we look here, we only want to pay the bills that are due to Channel Islands on the 19th. So we only have one bill due by the 19th, right? We only have one bill, and that is this bill right here, okay? All right, so we're not going to actually use this function to pay it. I could technically use this function to pay it, but we're not, because we actually want to use our check task. Okay, we're going to actually use our check task. All right, so, but I just want to show that there's only one bill that is technically due by January 19th. I know this is close because this is the 20th, but it says pay all bills due to Channel Islands on the 19th. All right, so I'm going to double check that though. Okay, so I'm wrong. We're going to pay both of these bills. We're going to pay both these bills. All right. I know it's a little says it just says pay all bills due to Channel Islands on the 19th using the checking account, starting with check number 1001. All right. So even though this isn't due until the 20th, we're going to pay both. All right. But we're not going to use this function. We're not going to use this function. Okay. So we're going to come out. We're going to exit out of here. And we're going to come over to the Plus New, and we're going to select the check task. All right. Now I'm going to stop for a minute. Why did I pull that up? Why did I pull that up? Pay bills. Pay bills. All right. It's so that you can see all of your current bills and their due dates. We did look at in the textbook using this function to record certain ones paid, but they were paid by the credit card. We're not paying with these by credit card. We're going to pay with these by check. So we're going to use the actual check task to pay for these. But it's just a good way to be able to look at what bills you currently have in the system, and then sort them by due date. Okay. So I'm exiting out of that. I'm coming back here to the Plus New, and I'm going to click on the check task. The payee is Channel Islands. All right. And we're going to make sure, all right, that we select checking account. Okay. Not cash, but checking account. All right. The payment date is the 19th. So we're going to select the 19th. Now, we're not going to select, we're going to select all. We're going to add all. All right. So we're pulling in the payable we set up with the journal entry here, journal entry 1. And then we're also pulling in that bill we just created off of that purchase order, if you guys remember. And it was step number 10. We recorded a bill based on that purchase order that we created. All right. So we want to pull them both in. So we're going to just click add all. And we added all, and we pulled them all in. All right. Now it says it wants us to use check number 1001. So 1001. The date is the 19th. The payee is Channel Islands. Make sure you change your bank account to match. And then it says checking. And we should have both items pulled over. Journal entry 1 and our bill that we entered based on that purchase order. All right. So your total should be $9,600. All right. So once that's done, I want you to go ahead and click Save and Close. All right. So now we've recorded payment. We wrote check number 1001 to Channel Islands to pay both those bills. That's basically what we did. Okay. All right. Now we're ready to go to step 14. Step 14 says to record a credit card charge. All right. So let's go back up here to the Plus New. I know a lot of you are going to want to come down here and click this. No, that's not what that function is for. All right, that is not what that function is for. To record a credit card charge, we're going to use the expense task. Okay. All right. So in chapter number 14, we're going to record a credit card charge to the vendor Village Travel. So let's use Village Travel. And we're going to use Visa. All right. So how do we use it? We used a credit card. All right. We're going to change the date to the 10th. All right. Now we're going to record a credit card charge from the 10th to Village Travel using our Visa credit card. All right. So what are we doing? Again, remember in our textbook, we were talking about how we were out running errands and we stopped and we bought fuel. So we used our credit card, swiped our credit card to pay for the fuel. So now we're back in the office. We have that credit card fuel receipt. So we got to record that transaction into QuickBooks. Well, that's what we're doing. So back on the 10th, we were at Village Travel and we went ahead and booked our travel and we used our Visa card to pay for it. All right. So what did we do? We booked travel. So we didn't purchase a product or service. All right, we booked travel. Travel would be an operating expense. So we're going to come over here under category detail, and you're going to look for the expense account for travel. Okay. All right, so we're not going to split it up. We're just going to put it under just travel. We're not going to use a sub account, just travel. You can put in here what you used it for, but they didn't give us any details in step number 14, so we'll just pass. But it did give us the amount of $1,800. So what is this doing? All right, really quickly, what is this doing? Let's talk about what this is doing as terms of financial information. All right, we're going to record the expense to our travel expense account. So you'll see a debit to a travel expense account for $1,800. We are creating a new liability against our Visa card. So every charge we make on our Visa card creates a liability to a liability account we set up for Visa. Okay. So credit cards do fall under liability. All right. It is its own payable. Okay. It is its own payable. All right. So this transaction right here, we are expensing the travel to our expense account. So we're doing a debit to our travel expense account. We charged it to the credit card Visa. So it's going to create a credit to the Visa account as a type of liability, a type of payable. Okay. So eventually when you get a credit card bill in the mail, you can reconcile all the charges to your Visa account. So you'd be able to pull up your Visa register and reconcile all the charges to your Visa account to your Visa bill and then pay your Visa bill. Okay. Go ahead and click Save and Close. All right. So I'll come over here. I'm just going to, for just sake of it, click on credit card. Credit. Now this would be credit card credit. Credit card credit. Okay, not credit card charge. Credit card credit. All right. So right now it shows a balance to our Visa account. All right, a balance to our Visa account. So this would be a reversal. If we're using this, is to be maybe to reverse a charge, basically. Okay, so there's no need for us to use it. All right, so I'm just going to head and exit out. I just wanted you to know the difference: credit card credit versus credit card charge. All right. Now we're ready for step 15. We're going to record another check to Office Depot where we purchase some supplies. All right, so go back here to the plus new, and we're going to use the check function again. All right, so we're going to click on Office Depot as our vendor. Check number 1002, and the date is the 11th. So, and we're going to come up here and make sure we choose checking account. Okay, checking account. So what are we doing here? Okay, we were on the 11th, we purchased some office supplies from Office Depot, and we wrote check number 1002 to purchase the supplies. So again, they're not products. We did not purchase products. We purchased supplies. All right, so we're coming over to our category detail, and we actually want to look for our supply asset account. So we have two supply accounts. We have supplies, which is an expense account, and then we have our supplies asset, which is a current asset. All right. When we purchase the supplies, it falls under the supply asset account. when the supplies are consumed or used. Okay, then we reduce our supply asset account and expense them out. So as these supplies get used, we reduce it out of the asset account and then expense them to the supply expense account. Okay, that's the difference between the two. Okay, so we're purchasing the supplies, so we're going to record it to our supply asset account. It was $375. All right. So once that's done, we can go ahead and click save and close. All right. Now, you have now completed steps 1 through 15. You are done. You are ready to now run your trial balance. All right. So let's go over here to reports. Let's click on reports. All right. I saved mine. I saved mine up here, so I don't have to scroll forms. I'm going to go ahead and click on trial balance. Now, if you click on trial balance and you see transactions down here, because you see it's going to automatically pull whatever today's date is. And if you see transactions down here that fall under this date, that means you did something wrong. All right, it means you did something wrong. And that means you probably did not put in a correct date, or you forgot to change the date. And that happens. We get excited, or we get nervous, or we get in a rush, whatever, and we've got to change the date. There's ways to fix it. If you come across that issue, shoot me an email, let me know, and I will troubleshoot it with you. Okay. All right, so we're going to go ahead and change our time frame. So we're going to put in the December 31st, 2023 to January 31st, 2024. Okay, go ahead and click run report. All right, so hopefully, fingers crossed, if we did everything correctly, when we did all of our steps 1 through 15, your trial balance should match the trial balance in your case study. Okay, again, if we did everything correctly, your trial balance should match the trial balance in your case study. If it does, and everything looks peachy and perfect, all right, then you're ready to export it. So let's start out with a few things. All right, you remember that credit card transaction? All right, because we use the expense task to record it. Here we see the travel was expensed. So we see a debit of $1,800 to our travel expense account. Let's come over here to Visa. Visa is a credit, and it's over here with our liabilities. All right, so over here with our liabilities. All right, so I just wanted to point that out. Just wanted to point that out. We now have a new supply asset account. We've increased our prepaid expenses. We've increased our inventory asset account. We've also increased our payables. And if you want to look at the details, you can click on it and it will take you to a transaction report and it'll show you a detail. So you see that bill payment that we recorded to Channel Islands for $9,600. Okay. So we see here when we did the journal entry, okay, I just want to point it out. When we did the journal entry back in December and we set up the payable for Channel Islands, $4,500, then we entered a bill based off the purchase order for Channel Islands for $5,100. So you see where we increased the accounts payable, all right, and then down here on the 19th, we wrote check number 1001 to Channel Islands where we paid both. All right, so we see where we set up in the payables, and then we can see where we took it out of payables with a payment, a bill payment. Just kind of want to point that out to kind of let y'all see the total flow of it. All right, so go back to report. So if everything looks good, remember to export it as a PDF to upload for your assignments. All right. And then don't forget, also run your transaction detail by account. So was always going to go click on classic view, do the same date range as we did. All right, click run report, and that's a transaction detail report. All right, so if your trial balance is good to go, this report will be good to go as well. And you just go ahead and click and export as a PDF as well. All right, if you guys have any questions or concerns regarding anything that I reviewed in the video today, feel free to let me know. And if you are doing your steps and something that looks different, something doesn't look right, shoot me an email and I'll do my best to help troubleshoot it and correct any issues. If something's looking different, if you're clicking a drop-down menu and it's not working, or you're trying to enter something and it's not letting you, I can't stress this enough. This is QuickBooks Online, so this is a web-based program. Sometimes these web-based programs may not be compatible with the internet browser you're using. So if you're using a different internet browser than what I'm using, it's going to look different sometimes. Now, I use Chrome and I use Edge. Okay. Both Chrome and Edge are usually compatible with QuickBooks Online. They usually stay updated with each other and stay compatible. All right. But you may need to, but if you're using Chrome and Edge and it's not working, you may need to update your Chrome or update your Edge. You may not be using the most up-to-date version of that internet browser. So please check that as well. So again, Edge and Chrome are usually the two internet browsers I use the most when doing QuickBooks Online. If you're using Chrome or Edge and it still doesn't look right, please check to make sure you're using the most up-to-date version of Chrome and Edge. All right. And if you're not sure what version to use, shoot me an email and I'll be glad to let you know what versions of Chrome and Edge I'm using, and you can make sure you're using the same versions. All right. Again, good luck, guys, and email me if you have any questions or concerns.